Hey everyone, going to take a look at Near Protocol. This is a coin that we did take a trade on recently within our group. This is the daily, and I have price action going all the way back to the beginning of the bull run back in October. Uh, Things that I would like to point out is a area of demand here at around the $4 range, and then we have a larger one up here which is at the $5.50 range, low being about 5.2 and high of 5.8. So these are two significant levels to be looking at as price action continues. We are above what looks like all of the simple moving averages, so that is a good sign. Can't say that for some of the other altcoins that we have been looking at and taking trades on. But looking at this rising wedge, these usually break to the downside. However, price has not done that yet, which is a good sign. But if it does, I think it'd be a good chance to either dollar cost average if you already have a position, especially a spot position, or a chance to buy in, which is what I think I will be doing. So I do have a fib chart starting at the most recent uptrend. This is sort of showing a bull flag, although the flag is very steep. So we'll see how well that does. We did have an obligatory wick down to the golden pocket, and then swiftly rejected above the zero point 0.5. So that is also a good sign. Currently, price is at the localized point of control, and we've mostly been above it. But if we break it down, we could revisit the zero point 0.5 or the golden pocket. At worst, I think we would come down to the 100-day simple moving average, which is in confluence with the bottom here, and we may print a double bottom before continuing higher. That'd probably be a great place to buy in as long as the broader economy complies and Bitcoin decides to continue its upward price action. So this is all good things for Near. And I think going forward, I'm going to buy more of it just because it has performed so well during this consolidation and poor price action for the last, I think, 50 to 60 days. Taking a look at the oscillators, we do have some bearish divergence. And we are printing red on money flow, so that is something to consider moving forward. And looking at our traditional oscillators, momentum has been to the downside, but we are above the 50 mark. RSI has been consolidating above 50, and we just had a wick up on the money flow index. So more neutral than anything else. We'll see what happens throughout the week. But if I had a bias, it would be bullish to neutral, more neutral than anything. Taking a look at the MACD, it looks like we're about to converge and come back to the downside. So that's one thing to consider when taking a look at all these oscillators as far as momentum. Again, more neutral to bullish than anything, but given the bearish price action of most of the altcoins and consolidation of Bitcoin, it's something you should be aware of. We could have more downside, so not really a time to buy. And then the other thing that I would like to show before we go to the hourly is during the parabolic move of the bull run and the peak here at about almost $9, volume started to drop off. So I would say this is more of a bearish divergence, if anything, only because price action has been mostly consolidating in this price range between about 8.2 and $5.2. And so that usually generally when price is going up and to the right and volume is descending, you could have volatile price action as volume and interest comes back into this coin. So that's just something to be aware of. I think that kind of makes sense for the phase that we are in. Concerning Bitcoin, usually we have a period of consolidation. Everyone thinks the bull market is over, and then all of a sudden we get a spike in volume, and then we continue our uptrend, and it surprises all of us dumb retail. So that's something to consider. And then when it comes to these demand zones, usually they're in confluence with major areas of volume. So you can see that there's a major node right here and then another one down here. So when you're placing your demand and supply zones, that's something to consider. And then the supply zone really is up here. I did not put it up here, but it's really the 8.2 level. That's where a lot of selling is occurring. Looking at the 1 hour, we can get a little more detail on the current price action. As you can see, I have this descending parallel channel. You can consider this right here the pole of a flag. And we have been consolidating. We have 1, 2, 3 points at the top and 2 at the bottom. So that bodes well for a more bullish price action. The more times you hit a resistance or support line, the more likely you're going to break it. So in this case, this is in favor of the bulls. And you can see that obligatory wick down into the retracement zone of the current uptrend, and it made it all the way down to the golden pocket and then quickly resumed its uptrend before hitting that resistance line. And now we're kind of in an area of where the price needs to decide what it wants to do. And what that really means is there should be momentum within this price action because of the formations. And we should break to the upside with some momentum. However, that can fail, and we do have that larger rising wedge. And if we do break down, we could potentially come down back to this area of demand at about 5.8. And there I would probably consider dollar cost averaging. The other thing that could happen is price action could just fail with not having any momentum and just continue consolidating in this direction below or above this area or point of control. So that's something to consider. Going to get rid of the simple moving averages and bring the Ichimoku cloud and the DeMark indicator just to see better what's going on. Recently, it has been respecting the trend reversal indicator. We have a 9 here, and then we continued up, forming this parallel descending channel. We did print a 7 before coming down. This 9 was not a very good sign of a reversal. There probably was an event that was associated with that. We did have PPI released today, and maybe the market decided to sell in anticipation. And then this was yesterday that we dipped down to the golden pocket. We then rose, printed a 9, and that ended up being a trend reversal. And now we printed a 9 recently as well to the downside. So we probably get some more price action. And then here within the next 24 hours, we should see what price wants to do. Hopefully that's in conjunction with positive price action with Bitcoin. And depending on how we break up to the upside, I'd probably buy on the test of the upper portion of this parallel channel as support, and then we'd probably go higher. If I had to be biased right now, I would think that we come back down and retest this as a double support, just so that we satisfy this rising wedge. These patterns usually have about like a 51 to 55% chance of occurring. So it doesn't mean that it has to, although in confluence with the momentum that's generally been neutral to positive, I would expect probably breaking it to the upside here. But that can change real quick depending on the economic news that we have, and we do have CPI coming out, I believe, tomorrow, and potentially some other economic numbers to go along with that. So PPI came in screaming hot, or hotter than expected. So that means we're probably going to get more inflation, and there is less of a chance of getting a rate cut. And crypto is really dependent on liquidity. So this is going to be an interesting cycle to look at, because this is the first time that crypto has not had that extra liquidity provided by the Fed and the Treasury. I could dig deeper into that, but that'll be a different video. So if you have any questions about NEAR, or want me to see or to look at another chart, just let me know and I'll take a look at it. All right, thanks. Bye.